What's going on, podcast family? Want to thank every single listener out there tuning in to the Stocks is Talking podcast with Ibn Getz. Very quick disclaimer, everyone. Please keep in mind, Ibn Getz, we are not financial advisors, people. We are simply two guys that love investing and we love to talk about it. At the end of the day, it's important to trade at your own risk. It's important to do what's best for your portfolio and always use discretion when trading in the markets. Welcome, world. Welcome to another edition of the Stocks is Talking podcast with Ibn Getz. I'm your co-host, Ibn. Getz, what's going on with you?
What's poppin'?
Man, everything. I'm feeling good, Getz. I'm feeling good. This is episode 9. Can you believe that?
Yeah, it's crazy.
Episode 9. We almost at 10, man.
Yeah.
We almost there. Just got to keep plugging away at this thing. I'm feeling like once we get past episode 10, I think we're going to have a little some surprises for the listeners out there. You feel me? We're going to shake it up a little bit.
Yeah, we're going to see what happens.
Yeah. So stay tuned. Keep checking with us. Keep rapping with us. We're enjoying all the engagement on social medias, the Facebook, the IG, the Discords. You know, the love we're getting is phenomenal.
Twitter
keeps us pushed. The Twitter, IB_Getz_pod. That's where we at on Twitter. It's jumping as well. So I'm just feeling good. I'm happy to be here once again, giving this good game to the people. You feel me? And talking amongst each other is really what we do, Getz.
Right.
We just have combos, and some people vibe with it. Some people really connect, and that's what it's all about. So I'm just looking forward to another one, man. I had a few things on my mind, Getz, but one I just want to, because we're doing this episode on a Monday today, so we've gotten a chance to see what the market looks like.
Yes.
The market was booming today, Getz.
It was, but it was.
Where did this come from?
Yeah. I don't. It was definitely booming from the gate. It was booming
from the gate. Yeah.
And then, but the volume was low. So I mean, after a while, you've seen everything just consolidate. So it's gonna be interesting to see what happens tomorrow.
That's what I see, because everybody's waiting on what the Feds are gonna say. I think they're supposed to be saying something on Friday about the inflation and all that. So that's kind of what everybody's poised for. But for whatever reason today, people said, hey, I'm buying. I'm buying in, and we're gonna pump this market up.
Right.
And I'm not gonna hold you. I jumped in on a put. On a put today. Yeah. Because the market is booming too much for it to continue this upward trend. Because I'm not really seeing a catalyst for this green we're seeing in the market right now.
Right.
I don't see the catalyst. So I'm kind of going against the trend. I'm not going to call it a trend yet. I think I'm going against this sucker rally, as my father calls it. I feel like the market's rallying a little bit, but for no real reason outside of people just buying.
Yeah.
So we'll see what it do.
I mean, as far as you got all the reopening stuff. That's gonna, I mean, those reopening trades, I could see them moving higher. Mm-hmm. But you got all this, the tech was so heavy, and with inflation coming and everything, I expect to see, like, at least the NASDAQ, I expect to see that, coming down some. Mm-hmm. But, I mean, some of those levels, though, they starting to get attractive. We had so much downside that now some of them prices are starting to look kind of attractive. I ain't gonna lie.
Anything in particular you looking at, or you just saying overall in the market?
Overall, I mean, one I know I was looking at NEO. The price of NEO right now is I like where it's at. It's down a good chunk. There's a few things. I've been going all through the market and just seeing, these low numbers that these things are hitting, and I'm like, they're getting to those levels where it's like, it's time. It's almost time to start buying.
Buying opportunity. Yeah, I see NEO's at 35.88. That's where it closed at today.
Yeah. So that's Neil's been taking a beating. I've been taking a beating. You know, I'm in it. So
yeah, I'm in it as well on a long-term hold.
Yeah. I got some leaps on them.
Okay.
I think they're for 2023.
Okay.
Yeah, so I'm just sitting on them, but
yeah.
I'm definitely taking a beating. You know, it is what it is. I plan on adding to that position, but I like the price right now.
Yeah, price isn't looking too bad. And I always, whenever I look at a company like NIO, I look at the competitors of NIO, and who's their number one competitor? Tesla. So when I see NIO at 35 and Tesla, which I think Tesla was on a move today as well. I think it creeped back up over 600. It's at 606 right now. That's how it closed.
Okay.
Yeah.
Okay. Yeah, I saw them moving up. I didn't know they cracked 600.
That's the one thing about Tesla, man. Those it swings so hard in either direction in any given day.
Right.
Today the low was $573. It closed at 606. You know, imagine if you would have got in on a call option when it was sitting at 573 for it to go up.
Crazy.
You know.
Yeah, it cost you a grip, but you would have made a grip.
Yeah. When you're messing with Tesla, it definitely takes money to make money.
Mm-hmm.
Especially if you want to be in on one of those call options that's near the money, you're gonna pay a nice premium for it. And I know some people out there, you might not know what we're talking about when we say near the money, out the money. It's okay, people, because Ibn Getz, we are gonna do an options video just on options at some point, and we're just gonna walk you through it. I think because that's been a hot topic lately. Options. Yeah, it has. I've had a few folks come up to me specifically to ask when is Ibn Getz doing something on options. So it's coming. But yeah, if you want to get in on those near the money options with Tesla, you are definitely spending a grip. But I wish I would have noticed what it was doing today, because I might have messed with him.
I did look at him earlier, but I glanced at it. I didn't really pay it too much mind, because when I was looking at it recent, I think it was over the weekend, I just took a look at it, and I honestly thought it was going to go down.
Okay.
You know? But I thought that about a couple things that was pushing up today. I was surprised, you know. And my son actually gave me a list of stocks Friday, and I missed his message. I didn't see it until the market closed, but I wish I had seen it, because when I was looking, almost everything he gave me went in the direction he said today. Except for one. Yeah, there was, and you know, most of them I was like, yeah, okay, I see it. But he gave me one name that I was just like, nah, there's no way. And sure enough, you know, he said he told me Nike. He told me Nike was gonna go up, and I was like, dude, Nike ain't going up. I was like, you got to explain that to me, because it makes no sense. You know, I even convinced him that it wasn't gonna happen. And then today they were booming. I was like, you know, I had to hit him up. I was like, yo, you was right on damn near everything, you know?
What was his thought process on Nike? Like, where did he come up with that conclusion?
I forget. He gave me a breakdown through a text message. I wish I could pull it up right now. But yeah, he gave me a little breakdown, and I was just like, I don't see it, you know? But yeah, he had a whole breakdown for why, you know, what it was in the chart that he saw, and he was right.
Right.
I was like, that's crazy, because I did not see it. I still don't understand how that move happened.
Yeah, that's dope though. That's good. It's, you know, it takes a village, you know, and even in the stock market, it takes a village. That's why you want to have at least be a part of some groups, preferably the Discord with Ibn Getz. But even if it's not with us, just have a group of folks that y'all can toss ideas back and forth. Because even something like that, your son put you on. Though you didn't quite understand it, if you would have followed his tip, boom, you would have.
I would have been eating.
Yeah,
I would have been eating everything he gave me, except for one. He gave me like 5 or 6, and they all would have been hitters except for one. You know, and I mean, you're gonna lose some. So I mean, if you hitting on 5 and you lose on, I mean, you know, I like them odds.
Yeah, man, it's a numbers game at the end of the day. Got to hit more than you win, and you know, in order to hit, man, you got to have those rules in place. You feel me, Getz?
Right.
We've both been in the game for a while in terms of investing, whether it's stocks, whether it's options, whether it's cryptos, which cryptos has been on like a nice roller coaster ride the last week or so, Guts.
Yeah.
To the point where people are saying, was crypto just a fraud and a hoax? And, was tanking, putting posts out on social media. Look at all y'all folks that thought crypto was this, crypto was that. But along with the stock market, crypto was up today too, Guts.
Yeah.
I got back in. I got into some more XRP. I got XRP when it had dropped to 68 cents over the weekend. I bought some more of it. Them fools are back up to 94 cents right now.
Yeah, that's crazy.
I haven't even
been looking at crypto because I went to I had bought some the other day. I bought ETH and I bought some Doge the other day. And then I was looking at my account and I got a notification about my my margin. So I didn't realize that the crypto didn't count towards my balance. So I ended up having to sell it, which it killed me because it kind of worked out. So when I bought it and I was up, but I was planning on holding it for a while. So, but it was going to be a trade. But the next day when I got the notification, I was down. Just not a whole lot, but I was down. But to satisfy my margin requirements, I ended up having to sell what I had.
Some of the crypto. Dang.
Yeah, so I still on all the exchanges I still have it, but what I had in Robinhood, I had to sell it all.
Oh man. Okay.
Yeah, I wasn't feeling that, but it is what it is. I had to do it. I'm not sweating.
Yeah, you gotta do what you gotta do. I'm not mad at that. But I kind of prefaced this briefly and jumped into crypto. Having those rules is crucial, Guts. And I think for me, because lately I'm back in on my options trading. And me and you have talked quite a bit offline about the options and I'm learning what I'm putting into place because I have a certain goal that I want to reach by my birthday, pretty much the end of the summer, in terms of the amount of bread that I've stacked into that account, strictly off options, strictly getting back into my options game. And it's like, you know what? In order to do that, I've got to follow my rules. My rules are, and actually this is one that I just came up with today, Gets. I only want to get on an option if that open interest or volume is 20,000 or more for that strike price.
Okay.
Now I know we always talk about, well, it's got like 5,000 open interest, 5,000 volume. Those are decent numbers. But what I've peeped and what I've noticed, every time I jump on one of these options that has volume or open interest above 20,000, it always ends up hitting where I'm expecting it to hit.
Okay.
So if I jump in on a put, meaning that the stock is going to go down, and that thing has 20,000 volume or so, it always seems to be the case where, boom, it's hitting. Now, I have noticed, though, that those 20,000 or more volume or open interest, you're paying more of a premium. Because a lot of those are kind of in the money, but still. And again, we're playing with different sets of money than when we first started, this.
Right. Yeah,
but it's like, hey, it takes money to make money. And if I see that this is something that's proven, that kind of works for me, I'm going to stick with it. So that's one of my rules. I want to jump in on an option where that volume or open interest, either one, has got to be 20,000 or more. I used to just look for over 1,000. Now I'm elevating it.
Yeah.
At least 20,000. I'm also looking at, during the day, the markets are very choppy. It can be up 1 second, down 1 second. Once I've kind of honed in on an option play that I want to do, what I'm doing is waiting till like 3:55. I'm waiting until right before the market closes to jump in on that option because I don't want to get in on the option and then it kind of moves the other direction just because that's just the ebb and flow of the market throughout the day. I want to kind of reduce that happening. How can I do that? I'm going to wait till 3:50, 3:55. Jump in right before the market closes and then, all right, let's see what it does tomorrow. instead of jumping in at 1 o'clock in the afternoon, and then you see that thing bounce up and down. I don't want that. I ain't gonna hold you. I did that 2 weeks ago. I jumped in on, I think I told you about this. I jumped in on the SPY at like 1 o'clock. And I knew I wanted to wait, but I was like, maybe it's dipping right now. Let me just jump in. That thing took off and went up $3 or $4 on me. And I'm like, but I got out of it. I took a little bit of a hit, but what I did, that risk management. I'm not gonna sit here and lose $700, $800, $900 on it. It's like, all right, I jumped in at the wrong time. I didn't follow my rule. Let me get out. I got out. That next day, I waited till 3:55. Jumped back in on the same position, just at a different price. Cause Monday came, I made like $650 on it. I told you about that.
Yeah,
could have made more.
Killed it.
At one point, I was making a stack, and I set my stop limit, which that's what. And I don't know for y'all listening out there, we're talking real advanced. We'll catch you up, but I set my stop limit because it's like, you know what? I don't want to just pull out of it because I'm making a little money. I want to let this thing keep running. Like I spoke before about letting your runners run. In order to do that, I'm gonna set a stop limit so it will pull me out if I'm at a $600 profit. That's why I initially set my stop limit. Right. But when I did that, I was making $800. So I was like, all right, if it happens to drop on me, the worst case scenario, I take 600.
Right.
Then that thing. Go ahead.
Yeah, and I remember we was talking about it, and I was actually telling you to set it a little tighter.
You definitely was. You was. So then when it went up to, I think I was making a stack, I was like, all right, let me adjust my stop limit to take me out at 650. Right. So I adjusted it there, and then it ended up pulling back. My option pulled back to the point where it pulled me out, and I got that 650. But I probably should have set that stop limit a little bit tighter. You're probably right. I could have set it for, pull me out at 800.
Yeah, and that's what I was, and that's what I was thinking. Yeah. I mean, you still killed that trade. Yeah. And that's what it's about. Mm-hmm. So I definitely ain't knocking you for that one. Because that was over 100%, right? Yeah, that was definitely over 100%. Yeah. You beat the bank 100 times over. Mm-hmm. So it is what it is. I ain't definitely sweating that one. Yeah, I had a couple. I mean, I had a trade today. I took a small L. Okay. I was kind of searching. I was going through a bunch of different charts, and I ended up making a quick trade on Home Depot, and I think I actually bought calls, but it was after the run up, and everything started trading sideways. Mm-hmm. And I saw something, so I bought a call. But then, even after I buy in, I still stare at my charts. Yeah. I got to confirm to myself that that trade was correct. Mm-hmm. And as I went through more of the charts, all I saw was just consolidation. So I gave it a second because I said, you know what? Let me see if if it's going to break out of the consolidation to the upside, and it didn't. It actually broke out to the downside. So I just cut it off real quick because I was just, it was one of those things. After I gave it, further review, I was just like, yeah, I'm just not even feeling it like that. And then I looked at the rest of the market and I was like, everything's doing it. Everything had the big run up, and now there's no volume, and everything's consolidating. So I was just like, yeah, I'm done for the day. Yeah. Now my son just sent me a list of stocks for tomorrow, so I got in a few plays. So we'll see how those play out for tomorrow. Yeah, so I'm in a few things for tomorrow, so we'll see what happens.
What did he send you? I'm curious.
He sent me the VIX again. He sent me the VIX Friday, and he said it was going to go down.
That's an index, right?
Yeah. Okay. Yeah, so that's the volatility index. Mm-hmm. He said it was going to drop, which that tells you, if your volatility is down, your volume's down. True. So that was like his first one. He was like, "This is dropping." I was like, "All right, cool." So he actually was saying it's gonna drop again. So I think he said it was gonna drop again, but I didn't get into that one. Okay. But I did. He sent me Disney, Carvana, and something else. I forget what it is. He sent me a few joints, and Simon Property Group.
Okay, SPG.
Yeah. He sent me a few, and out of all of them I went through, I was feeling Carvana, Disney, Simon Property Group. So I jumped into those. I got calls. I got some calls on them. So I'm like, I bought them maybe like $345, $350.
Okay.
So I'm like, yeah, I'll just sit on these for tomorrow.
See what they do.
Yeah, see what they do. I mean, I didn't go too crazy with it. You know, a few contracts of each, all options plays.
Okay.
And it just is what it is. We'll see what happens. You know.
Hey, there was one thing that you said that kind of circles me back to the rules I'm putting in place for myself. Mm-hmm. And you said that you were searching. You was like, you know, I was searching before you jumped into something that you ended up jumping out of. One rule that I'm putting in place for myself gets, and I don't know if you can attest to this or not, when I've hit on certain plays, like for example, I hit for that 650 last week, I'll hit, and then that adrenaline, and although we've been in the investment game for a while, it's still an adrenaline rush. I'm sure it is for anybody. If you jump in and you put some money in, even if it's $5, your endorphins, they're doing something inside your body. So that adrenaline starts to rush. So imagine you pull out, make 650, you're excited, you're like, yo, I figured it out, I beat the bank. What's the next one? Let me go search for that next hit. And it's like, I've got to put the brakes on myself and say, you know what? After I make a good play, I'm done for the day.
Yeah.
I'm putting that rule in place for me because there's been many times over the years, I'll make 800, 1,000, 1,500, 500, and then I'll make another play an hour later and lose 500. Yeah. And it's like, I'm tired of giving my gains back to the market. Yeah. So in order to prevent that, in order to protect myself from myself, after I make a trade for the day and I come up, I'm done for the day. And even if I lose on the trade, I'm done for the day. Like, because it's also the reverse effect. If you go in and lose 500, it's like, let me jump back in here and get that money back.
Yeah, I gotta get it. I gotta get it back. Yeah, and this is my thing, and this is, you know, one of my rules actually is not to search for anything. I tell myself I'm never supposed to search for a play. Mm-hmm. So I think I was talking to you the other day, and I was saying how all I do is I have a watch list and I scan it.
Okay.
And as I scan it, I pick out the charts that look the best to me. If I scan my whole watch list and nothing jumped out at me, then I don't need to be trading.
Yep.
The mistake I made today was nothing jumped out at me, but I was searching.
You wanted that fix for a trade.
Yeah. I had a little itch, and I was trying to scratch it. So I was just looking for a little trade. But then after I did it, I realized what I did. So I said, all right, that's it. I'm done. So I walked away for the day. I think I might have looked at a chart, a little later on in the day. I didn't scan for anything else. I just looked at one chart. That's like my main one that I look at. I look to see, I like to look at the SPY.
Okay.
Because that's an index. So it's like, what's the SPY doing? Is it this everything was consolidating, so was the SPY. All right, now did the SPY start moving? Because if the SPY started moving, that means the market's moving. So I went and looked at that real quick. I was like, all right, SPY's still not moving. So I'm sticking to that. I'm done. Yep. I'm not going back out here looking for nothing.
Yep. And that's a smart play though, Guts, because you're, like I keep saying, protecting yourself from yourself. Putting those rules in place, so it's like, all right, you know when to stop and when to go. And that's a big thing when you're in the markets, when you're investing stocks, options, cryptos. You got to be able to stop and go. Know when to stop, know when to go, know when to hold them, know when to fold them,
Right. Yeah.
You got to play your cards right in this game. Today's episode is brought to you by Nice Touch Editing Services. Nice Touch Editing is your one-stop shop solution for all of your content writing and editing needs. Whether you're an author looking for an editor for your book manuscript, you need a resume and cover letter to go after that new job opportunity, or if you're a small business looking to go after that latest government contract, Nice Touch Editing is the premier writing and editing solution. Feel free to reach out, www.nicetouchediting.com. Nice Touch Editing Services. Now that's a nice touch. Because at the end of the day, Gets, honestly, we're all in it for a reason, you know? Whether it's for a reason or a season or a lifetime, we're in this game to get something out of it, you know? Which right. I kind of referenced that back to, I think it was episode 2, back to the basics, where we're talking about what kind of investor are you? Are you a long-term investor? Are you a short-term investor? You a day trader? What kind of investor are you? And now that you've understand that, now it's talking about, well, what are your goals? What are your short-term goals? What are your long-term goals? I mean, I put one of mine out there. I'm trying to get 30 racks by September 22nd, strictly with my option plays. Right. That's what I want. So far, I've made 650 towards that goal. But the question for me now is, one, how do I put the rules in place to protect myself so that I'm not giving those gains back to the market? And how can I slowly build on my previous gain to the next game, you know? And that's the toughest thing, I think, for me. And it could be for you too. I'm not going to speak for you. When it comes to giving back those gains, it happens so often with everybody. You give back gains after you've made money. So it's like, how can you sit here? And I'm thinking what I want to do is visualize it. I want to get a vision board with my rules of engagement. When do I want to get in on an option? At what point? What are the parameters? What am I looking for when it comes to volume and open interest? What am I looking for when it comes to being in the money or out the money? What am I looking for when it comes to an expiration date? Do I want to do a weekly? Do I want to do 2 weeks? Do I want to do leaps? All these things, I think, come into play, and it's important for everybody out there. You've got to get your rules of engagement down. You got to get your goals out there. You got to get the rules that are going to govern how you trade. You've got to get something that dictates what you do, as opposed to just searching every day for a play. Because you start searching every day for a play with no real guidance behind it, and it's going to lead to disaster, Gets. And I don't want disaster. Right. I want incremental gains. Yeah. Every single day. Yeah.
You want to beat the bank every day, and that's why if you know what kind of trader you are, and then you set up your rules for how you're gonna make your trades with the and then you set these goals, and if you follow it all, then you're good. Yep. You're still gonna have losses along the way, but your wins will be so much more than your losses. And so and we've been talking a lot about all that, and I have my rules, and I was talking about not searching. We talked about with the options, with the open interest and the volume and stuff like that. I don't look for the crazy numbers you look for, but I still look for a high, a decent open interest, stuff like that. Right. But I also have I have my set of rules. Like, I don't trade before 10 o'clock. Okay. 9:30 to 10 o'clock, I let the market settle. Okay. And some people will feel like, all right, well, like today, oh, well, you missed out. Well, yeah, but on another day I could have lost. So I stick to that rule, because the times when I haven't stuck to it, those are the times when I've lost money.
Yep. You can't let that FOMO get in the way.
Right. So
your rules.
Right. So I have a rule, and I try to stick to it, regardless. I try not to even look at the market before 10 o'clock. I might look at 9:30 just to see where things opened up at.
Okay.
And then I put it away. I don't want nothing to do with it for 10 o'clock because I need to let the market settle.
Because a lot of times that between 9:30 and 10, the markets can be very volatile and crazy.
Right.
Like out of control crazy. But like you said, once 10 o'clock comes, things can kind of tend to settle.
Right. So that's my thing, is let it settle from 9:30 to 10. That's a rule.
Mm-hmm.
You know,
that's a good rule.
And just like you have your
Let me ask you this. Let me ask you this, because it goes to that rule. Let's say you're in on an options play that you got in the day before. Are you gonna look to, like, if your option is jumping at 9:30? That's you get out or wait?
Yeah, no, that's different. If I'm swing trading, then if I set up like right now, I set up trades today. Those are swing trades, right? Because I'm holding them overnight. So tomorrow, I need to look at my swing trades and see where I am. So at 9:30, I'm going to look at my trades.
Okay.
So that's going to be my first thing.
Yeah.
Look at my trades, see where I'm at. If I'm up big, I might just sell. If I'm like, all right, I like the way this is set up, then I'm probably not going to look at it again until 10.
Oh, really? Okay.
Yeah, because this month, if I'm up big or I'm down big, all right, it's 9:30. I need to make a decision. But if it's in a good spot where I think, all right, I have more runway, I want to let my runners run, or I'm at a break even or something, but the chart is set up in a way where I think there's still a lot of gains left. Then I'm gonna leave it, but I'm not gonna sit there and stare at it.
Okay.
So I have to be confident in that position.
Okay.
Because I'm not staring at it, and I can't stare at it. I got things to do.
No doubt. Yeah.
So that's what it is. So no matter what, it still works out that between 9:30 and 10, more than likely, you're not gonna see me staring at no chart. I actually hate staring at charts between 9:30 and 10 because I just like to let the market settle. I need to see because it's if you look at it, go and look at your charts, right? It's a picture. Why I don't want to stare at an empty canvas,
right?
Start drawing a picture, and then so that way I have something to be intrigued by,
right?
No doubt. You drawn a naked lady, but you haven't drawn the first line. It's an empty canvas. I don't care.
You need to wait to see some parts being laid out.
Right.
I get it.
So that's my thing. So I wait until 10 o'clock because then now that the drawing is there. So now I can see and I see those patterns. I talk about how I pick up on the patterns. There's at 9:30, unless you can look at pre-market, and sometimes you'll pick out patterns in pre-market that lead you into the day. But for the most part, I don't want no smoke with pre-market. There's no volume or nothing.
And pre-market can turn on you. Markets could be red in pre-market. As soon as 9:30 hits, now you're seeing green, or vice versa. So It's hard to really gauge what's going to happen in the pre-market, or even when you're looking at the futures market. Once the market closes, the futures will close green, then the market opens up red. You just really don't know.
Right. So that's why I just don't bother. Let it settle. Start drawing that picture. Then I'm gonna come back. I'm gonna look at it.
And like you said, once 10 o'clock hits, 10, 11, maybe 12-ish, that picture is becoming a little more vivid for you to gauge what are you painting here, and how, and what should the next move be. But you really can't do what picture is being painted at 9:30 because it's so volatile. It just looks like a bunch of scribble.
Yeah, that's all it is. And which is crazy because you had the volume was so low today. After the big run up in the morning, everything looked like scribble. It looked like the size, they're measuring an earthquake. I forget what thermometer, whatever.
Whatever it is.
Yeah, it looked like that. It was just up and down, up and down. It was just so sideways.
Yep.
You know, so it's like, all right, I'm all set with that. You know, I have other things I could do with my day, so I don't need to sit here and stare at this because there's no direction. If there's no direction, there's no money. You know, unless, I mean, you could scalp little bits and pieces. You know, I don't know if I've mentioned it before, but scalping, you know, you take a little bit off the top, whether it's going up or going down on the options. But for me, the percentage is so low on a scalp that it's not worth it.
Right.
Unless I'm gonna buy a huge amount of contracts, you know, and then, but your percentage is still low. So let's say, you know, to make $500, I might have to drop like 10 racks.
5,000. Right. Hey.
5 or 10,000. Like, is that worth it? It's, you know, because it's not even, because my thing is beating the banks. So, and I not by a little. One of my rules, you know, I'd like to try to get 10% a day, but worst case scenario, I'm trying to get 10% per week, right, of my portfolio, you know, or of my account. So, and that's not easy, and I don't do it every week, but at the same time, if scalping is going to make me 0.5%, is it really worth it to risk that big amount of money?
Right.
You know, so it's that risk reward, it doesn't make sense to me sometimes, you know, so I don't do it. If something is just so obvious that I'm just I'll get the scalp and maybe more, and it's just obvious, there's no way I'm gonna miss, my conviction is just that high, then sometimes I take it.
You know? Well, I mean, when that conviction is that high, sometimes you just got to go for it because you know. And when you know, there's no way to, well, there's times you can explain it, but a lot of times, especially when it's a scalping opportunity, they quickly. So it's kind of like, oh, I see what this is. I know this is the case. Let me jump in and jump out. And I did it last week. Right there. And I did it. I think we talked about it. I had 2 or 3 trades on, I think it was a SPY, and I could have just bought the trade in the morning and just sat on it. You know, I think I bought puts. I could have just sat on it and just let it drop. But instead, I took the scalp in the morning, and then I waited for a confirmation. And then when I got my confirmation, I went back in and I got a little more. You know, I took way more than a scalp on the second trade. The first trade, like my sell order was in right after I bought it. Like I planned it before I bought it, that this is a scalp. You know, so I got the scalp, you know, so the trade literally was like less than a minute. In and out. And then after I got confirmation that the trade was, that it was going to go the way that I wanted, then I got a bigger trade, and I let it run a little longer, you know. Now walk me through what that confirmation looks like. Like
what
were you seeing?
I'm looking for a confirmation. So I was looking for a confirmation in the candles. So let's say I'm looking at the SPY and it's dropping, and you know, I have my moving averages on there. So I'm looking at, you know, I have the 5 moving average, 5-day, you know, the 50-day, the 200-day, and I'm looking at it, and the 5-day looks like it's about to cross the 50-day. And if it crosses below the 50-day, that's bearish, right? So
if the 5-day moving average crosses below the 50-day moving average,
I mean, just the fact that it's already heading that low, that's a big deal. But if it crosses below the 50-day, that's big. That's very bearish, right? So let's say, so now I'm like, all right, I have some confirmation, you know, once it crosses, that this is going to continue down, you know, or maybe a certain patterns. Maybe I have, you know, a flag, a bearish flag pattern, you know, and it's like I have a big red candle, and then it starts pushing up a little bit, and then it dumps, you know.
Right.
You know, so or I have I'm trying to think of the names of the patterns, but like we was talking about the 3 white soldiers. You know, remember the other day I kept mentioning that to you. I was like, watch out for that. You know, it's like I think you wanted to get puts on something, but I saw a big green candle. Yeah, it was.
Oh, it might have been a QQQ
or QQQ.
And these are indexes, people. SPY, QQQ, VIX. These are indexes that you can trade. So the SPY just pretty much contains a bunch of different stocks.
500 stocks.
500 stocks in the SPY. How many's in the QQQ? Because the QQQ is the NASDAQ, which is mostly tech stocks, right?
Yeah, so NASDAQ, so there's QQQ, but I don't know how many stocks are in that one. I know DJI, the Dow Jones, has 30. And then the SPY is 500 because that's S&P 500.
Yep. So these are also top stocks.
Yeah. They also have S&P 100. You've got the Russell 1000. So you have all these different indexes. So you know they stick all the stocks in a basket. That like there's a board that decides what stocks are going to go in this basket, and then they have some mathematical equation for how they average out what each stock is worth, right? To come up with their number for what the index is going to go for, right?
Absolutely.
So my thing, like I like to trade the SPY. So
you can only get options on these indexes.
Yeah, you can definitely get options on them, and you can trade them too. You could trade the stock too if you wanted to trade the stock.
Really, I didn't even realize that. I thought it was only options. Okay.
Yeah, no, you could trade the stock too. You know, whatever the price you see, that's the price you pay. You know, but the whole point of trading the options is options are a way of getting leverage, right? So you get a stock, and the stock moves $1, you get $1. Right, $1 per share. If you get an option, each options contract is for 100 shares, right? So technically, you're getting a kind of leverage. Yep. You're getting this 100x leverage, right? In a way, without you having to borrow money.
Exactly. So if you have 2 options, it's essentially 200 shares.
It's 200 shares. Yep. Yeah. So you get these big moves. So instead of you know you making, if you had 200 shares and it moved $1, you'd make $200, or you'd lose $200. But you have the option and you have that leverage. So instead of $200, that might mean you made $1,000.
It depends on how many contracts you bought. Right,
and how far in or out of the money you are. You know. So
and when the expiration is, and it's a lot that goes into it, but
you know, but and like you said, we'll do a whole video on that. So, but what were we? So the SPY. So all right, I'm looking at the SPY, and we were talking about the 3 white soldiers. So I see a setup where it's dropped. And it's sitting on a level of support, and then it's got a big green candle. So I said, "Hey, watch out for the 3 white soldiers."
So So explain, because I didn't quite understand even when you told me. So the 3 white soldiers, what pattern is that?
Yeah. So
what pattern am I looking at from on my charts?
So you have, obviously depending on what chart you're looking at, but you'll have these 3 big green candles, like full green candles, right?
Back to back.
Yeah, so it's like it's marching up.
Okay.
Right? So that's what I was telling you to watch out for on the SPY, the QQQ, whichever one it was. And I think I want to say it was QQQ, because I want to say we jumped into something, into a trade, because I was like, I watch out for that, right?
Right. So you know what? No, I think you jumped in and I didn't.
Yeah, you left me hanging. That's what it was.
It wasn't that. It was my rules, the rules that we put in place. This is exactly what happened, guys. You said to me, hey, because we were looking at it during the day. We were looking at the candle, and we were both looking at this long wick at the top of the candle. For those of you who aren't familiar with a chart, a long wick at the top of a candle means that stock jumped up. It jumped up, but then it consolidated. So there's a long wick showing that it jumped up and then consolidated back down. So you was like, hey, I'm looking to see if this wick is going to fill out or if the market is going to close with this candle and this long wick. Now, I told you I like to wait till 355 to jump in. So around 355, I noticed that wick had filled out. And you said if it fills out, it might be ready to run up the next day.
Right.
So I wanted to when I saw it fill out, I was like, well, no. Getz kind of said, if it fills out, he thinks it's these three white soldiers. So I hesitated, the market closed, and I was like, hey, I missed out on it. And
yeah, but I was in it because because talking to you, I was like, all right, I'm gonna just take a flyer on it. I'm gonna just see what happens. What I should have done was hedge. I should have set up both sides, either done like a strangle or a straddle, right? So either got in the same position on both sides or got in a position like, one off from each other on both sides of the trade, right? So I would have made money no matter what, or at least had a break even.
And that's what I was about to say, Getz. And my pops is known for talking about doing trade, but I never really get the benefit because if you win on the call, that means you're losing on the put. If you win on the put, that means you're losing on the call. So then it, like you say, you kind of break even. So then what's the point at the end of the day?
So for me, and I don't, it's very rare that I ever do this, but for me to set that up, my thing is, I'm not 100%, but if I set this up, then, let's say I'm setting up a swing trade. So it's 355, like you like to do, right? I set up like a straddle. I set up one off from each other on both sides of the trade. And then the next day, I have a clearer picture of which way it's going. Let's say, all right, now I'm sure this is going up. Now I can cut off the put that's losing and let my runner run on the call, right? So instead of it just being a break even, that's how I would make my money. Like I said, I don't usually do it. I usually just pick my position and trade it. But it's a strategy. And there's a lot of people who use those strategies. I'm just, like I said, I'm not huge on it. I like to keep it simple. Some people are into like these complex trades, and I just want to put my trade on, and I'll come back and look at it later, and it's either a winner or a loser. And leave it at that. I don't like to be complex with it. I'm too busy for complex.
That's real, Getz. Because being that smart money trader, Getz, which what we always talk about. Being a smart money trader, you've got to simplify it to the best of your ability. You feel me? And when I say to the best of your ability, meaning the trades that you're making, keep it simple. Learn, understand, get research, get tools and strategies in place so that it becomes a simplistic process for you. Whether you're getting into a trade or whether you're getting out of a trade, keep it simple. And I think the best way to keep it simple is to have those rules in place for you as a trader. What are your goals? How much money do you want to make this week, this month, this year? Okay, how much money do you want to make in a day? How much money are you willing to lose on a trade? Do you want to go by money dollar amounts, or do you want to go by percentages? Because I know one thing I'm putting in place for me, 10 to 15% loss, I want to be out of the trade.
Right.
15% max. If I hit 15%, I'm definitely out. Once I get to, and it's kind of like when you set those stop limits, you tell the system, hey, once it gets to this point, get ready to jump out. But once it hits this number, take me out immediately. It's the same thing with my rules of 10 to 15% to get out. Once it hits 10%, I'm ready to get out of that trade, but I'm going to sit and wait for a second. But once it gets to 15%, I'm done. That's it. I'm putting a cap on those losses and gets. Again, we've been doing this shit for a while. Back in the day, I would get in on a trade and I would watch all that shit drain out.
Yeah.
And be pissed. And be pissed as I'm watching it. As I'm watching it drain, I'll look like, okay, well, it's gonna come back. Come back an hour later, it then dropped $2 more. Yeah. Okay, and it's gonna come back.
Yeah, you let the emotions get involved, and you looking at your trade, and the whole thing is like, this could be the last of your bread, and it's about to go to zero. But it's like, all right, I could get out now and take this $200, but I started off with $1,000. You know, if I just wait, it's gonna come back, and I'm gonna get my money back plus some.
Yep.
And then you look at, you have the FOMO, because then you're looking at, all right, so and so just made this guy that I was listening to on YouTube, or somebody I was I spoke to on Twitter, they made $1 million. So if I get out now with $200, I'll never get to $1 million. I just gotta hope.
Damn, yo, that's the picture right there, Gets. Because that's real. Those are the type of things that play in your mind. Yeah, it's played in my mind many times.
Yeah, and I actually, I actually had there was a somebody I talked to on Twitter. It was an options trader that I was following for a long time, and every day he would just give out game every day for free. And one day I said, "Yo, I'm gonna just reach out to dude. Like, he's probably not gonna respond, but I'm gonna reach out to him."
True.
And I reached out to him, and we ended up having a conversation. Dope. And I was like, "Yo, I got a small account. I think at the time it might have been a few $100s or something, but the account was growing. I was growing it fast, and I was like, so here's my plan." And dude completely broke down my whole plan and was like, "You're doing it all wrong." Like, because I was like, "Yo, I'm gonna keep growing it and going all in and growing it," and he was like, you growing and you going all in, and one of these times you're gonna lose, and you're gonna lose it all.
Damn.
And I was like, damn, I hear what he's saying, but I was like, nah, I'm good. Like, I'm nice with this, right?
Word.
Ended up blowing up my account. I ended up having nothing at the end of it. And I was like, yo, he was right. And that was his thing. He was like, yo, even with, and this is a dude who he would make trades and he'd be making, 50, 100, 200,000 on a trade. He was like, even with that, when I make my profit, I take it and I put it to the side. And he's like, if I'm winning and I keep putting the profit to the side, even if I blow up my account, then I could just go to the stash and put it back in.
Okay.
So and it was, I'm like, yo, but I got $200 and I'm making $20, $30 at a time, $100 at a time, whatever. I'm like, that makes no sense for me to go and put it in the stash, because I need it to grow. I didn't listen to him, and I blew up the account, and I had to start over. I had to go out and grind and make some more money and put it back in the account, so. These are all you got those rules of engagement, and you got to figure out what's your plan, what's your goals, like we keep talking about, right? It's like, if it's $10 a day,
what does it take to get there?
Right, and this is my thing, right? Like we talked about it before. It might have been episode 1, 2, 3, one of those, where you was talking dollar amounts and I was talking percentages.
Yep.
Right? Yep. And I was like, I don't look at dollar amounts, I look at percentage. Because my thing is, if the bank pays me, if the local bank pays 0.1, I don't use the local bank. I go find a high yield. High yield account's gonna pay me 0.4, 0.5, right? Which is still shit, right?
Yep.
I'm gonna take that for the money that I need to park, right? But now my thing is, the money that I'm investing, that money I've sent that money is my soldiers. I sent that money out to go and get more. So if that money only comes back and only brings me 0.5, I'm gonna tell that money get out my face and get back to work, right? That money's got to go out there and it's got to bring me. I want it to bring me back 10%, 20%, 100%.
Word.
And it just like a business, right? For your business to survive, right? you should be, at least this is my experience in business. I look for a 3x return, right? On,
Okay.
Like I've had my shops and everything like that. It's like if I buy a part, I expect a 3x return on that part, right?
Right.
So I'm not even looking for 3x. That's 300%. I'm not asking for that. I'm saying on a daily basis, if I put my money out there, I want at least 10%. So when I make a trade, I'm not trading with my whole account. I'm not going all in on the trade. But whatever I put into the trade, I'd like to see a 10% return.
Right.
And that's why, like, you talk about letting your runners run, and sometimes, we'll be talking and I'll be like, yeah, I cut this trade off and I took 25%, but if I left it, it would have been, 2x, 3x,
yeah,
7x. And it's like, well, but my thing was, I've had too many that I had the 25% return and I let it keep running. And then when I wasn't looking, it turned around and I ended up taking a 20% loss. And I was like, but I had the 25% was on the table already.
Yep.
So that's why sometimes you'll see I'll take my 25% and then come back and go back into a trade. Once confirmations and everything. Because as your day goes on, you have those confirmations or you have rejections, right?
Yep. You gotta follow both sides.
Right. So it's like, if I can't watch it, but I'm looking at it right now and I'm up 25%, 50%. All right, let me take that because I know I'm not gonna be able to look at it later. So, and then later, if I can't look at it, when I finally get a chance to look, if I see, damn, now I'm down 75%, but I was up 25% earlier, I should have just took that. I got tired of saying I should have.
Word, and you just started doing.
I started doing. Let me just take that off the top. I always go back into a trade, but I can't go back in time and get that profit back if I'm at a loss.
No.
Especially if what you see. When I day trade close. I trade the options. I always trade close expirations. You don't have time to waste.
Which is a gamble. Yeah.
It's called a casino trade for a reason. So if you're going 7 to 14 days, it's you're gambling. That's what it is. You don't have time to waste.
Nope. And when you get your money and take them chips home, because that casino is designed to keep you gambling and take that money right back.
Exactly.
So with those quick casino trades, as we call them, you see that even if it's 10, 15%, just because you see the person sitting next to you just cash out for that jackpot, don't think that's going to happen to you. Take your 10, 15, 20% and roll out. Live to see another day with that casino's money in your pocket.
Right.
That's a successful day. That's a successful trade. And that's what it's all about when we talking and chopping it up. We just want successful trades continuously.
Yeah.
So man, that's big though, and I'm glad you brought that up because, and it's interesting how you say, we've mentioned a few times about not really being able to sit and watch. There's so many people out there, especially beginning traders, that are into it. Like they like trading, but they will sit and computer watch all day and get real antsy as they see it go up, see it go down. So to you out there listening, and if this is you, you've got to learn to relax and understand that the stock market is volatile. So you've got to be able to stomach the roller coaster ride. Right. Because if you can't stomach it, it'll drive you crazy. And I'm sure it already is driving you crazy day by day, especially lately with the way the markets are, COVID, cryptos all over the place. Things get a little bit touch and go right now. You got to be patient, and remember why you're in it.
Yeah, and what kind of investor are you, right? If you're investing, you shouldn't even be watching it. You put your money in and you let it ride. Because you should already have your plan, right?
Yep.
You said, I'm going to buy this stock and I'm going to sit on it for 6 to 12 months or 18 months or whatever, because this is what I believe with this company, XYZ. So if nothing's come out and told you otherwise, then why are you looking at it anyway? You know,
Facts.
if you're a day trader, that's different. Now, you know, I don't remember if I don't know if you remember my setup, but day trading, you know, I had multiple screens, and you know, you're gonna be staring at some screens and stuff like that, but you know, you know what you have your rules in place, and you're just looking for that next play.
And at that point, you're a seasoned investor or day trader.
Right.
Like somebody new to the game, you probably shouldn't be day trading, because day trading takes a certain level of comfortability with charts, comfortability with playing with nice chunks of money quickly in and out. And again, I'm just putting it out there. For a day trader, you got to be seasoned, in my opinion.
That's why they have paper trading accounts.
Ooh.
You know what I mean?
Trade.
Yeah. You're not gonna get that on Robinhood or nothing. Like go find a real broker. You know, you know, I mean, even Webull has paper trading. Go find a broker that has a paper trading. I think TradingView even has paper trading. You go in there and you paper trade and you back test. You know, when you go back to previous dates and play back a day. If you're not that dedicated, then what are you doing? You know what I mean? Because if you're not back testing strategies, then you're not dedicated to this game. You might as well just invest, right? Just go throw your money in an index fund and leave it there and go back to work, right?
Absolutely.
But if you're dedicated to it, then you should be paper trading. You should be coming up with your strategy. All right, now you think you figured out your strategy. Now go back test your strategy and find the holes in it. Find what's wrong with it, right? And do that. Put the time in like we put in. You know, put in a year, 2 years, 3 years, and then come back.
And then come back. Nah, that's big facts. It takes so much. Like my man Nipsey once said, dedication, hard work plus patience. That's a key. That's a nugget when it comes to investing. You've got to be dedicated. And in order to be dedicated, you've got to put that work in, and you got to be patient. Right. It's not going to happen overnight. It's just not going to happen like that. I think a lot of times we see people hit the lotto, or we see people hitting the jackpot at the casino, or we see such and such on Twitter making X amount on Doge. He just cashed out. He's a new millionaire, billionaire. That shit does not happen every day for everybody. In the real world, it's going to take time. It's a slow grind. You can hit some big hits on a consistent basis, but that comes with time. There's been so many times I've lost back in the day, and then I was able to put some new strategies in place. So now I might be able to make $650 in a day because I now understand how to read a chart, how to look at a candlestick pattern, how to look for the wicks, how to look for the bearish candles, the bullish candles. These are all things that come with time, you know? So, I mean, that's the main thing out here. What are your rules of engagement, and what kind of time and effort are you really putting into this game? And once you start putting that time and effort into the game, you'll see the differences. You'll see the results. Just like a ball player. Like, who was it? Ross or Drake? Somebody said you wasn't with me shooting in the gym. Like, you've got to be in there shooting in the gym to start winning those championships. Same with the stock market. You got to be out here paper trading, looking into your candlestick Bible to understand what these different candlesticks and trends are. Doing all those, putting your resources into play. What websites are you using? Where are you getting your info from? All that is shooting in the gym. Once you start shooting in the gym, then you start hitting those last second buzzer beaters and winning those championships, winning those rings. You gotta put the work in, you know? But at the end of the day, people, Ibn Getz, we are not financial advisors. We're two cats that love investing, and we love to talk about it. You always have to do your due diligence. You have to trade at your own risk and do what's best for your portfolio. I want to make sure that everybody listening is following us on the socials, because they're really lighting up the game right now. Facebook, Stocks is Talking Podcast with Ibn Getz. We're on IG, Ib_Getz_podcast. We're also on Twitter, Ib_Getz_pod. We're also on the Discord, which has really been jumping Getz. It's the discussion chat group Getz. How can they get in on the Discord?
Yeah, they gotta hit us on the socials, and we'll send the invite and get in there and chop it with us.
Come chop it with us. We came, we saw, we conquered. That's it. That's all, folks.
We out.